Okay, we're starting closing bell with a bang because Bajaj Finance numbers are at the bottom of the screen, and well, you got numbers out there: 0.87% gross NPAs compared to 0.94% quarter on quarter. There is an improvement, a reduction. Net NPAs have come off a little bit, just a little bit as well, 0.31 as compared to 0.34. Profits 3437 crores compared to 3368 crores. So profits are also better. And the net interest income, I think that one is also much better, 8,400 crores nearly as compared to an expected poll of, I think almost, it's a big one, especially as far as the net interest income is concerned. So the first set of numbers as they're coming through up on your screen, stocks at about, 76.87 or so. My colleague Abhishek will be joining us in just a bit with more after he takes a quick look at the numbers. But we're starting closing bell, so let me welcome in my colleagues. Surabhi and Nigel are here. Guys, hi.
Hi.
Hi, Prashant. Hi, Nigel. I guess on Bajaj Finance, we anyway had the operational update, and it was a blowout quarter, right? After a while, Bajaj Finance grew at that 30% run rate year on year. So that was in. I think the watch point is on margins, because some of the estimates were saying that maybe there'll be a small cut here and there.
Yeah.
But if they manage that, and considering that this is such a huge beat on the net interest income, maybe that's the excitement that's already showing up on the stock. But otherwise, it's been a good day. I mean, look at the Nifty. We have been very comfortable above the 19,800 mark. And it's been good going so far.
That's true. I just, the asset quality of Bajaj Finance actually has improved a little bit on a sequential basis. I think that was something that the street was looking forward to. And the NIMs, the spread is expected to decline by close to around 25 to 30 basis points on a sequential basis. So that number should come up for us in just a bit. But for the time being, the street likes these numbers, and we have moved to the high point of the day. But the big event actually is later this evening, when we'll have a hear from the Fed. And, the options data was such where the call writers were coming back. Suddenly they've got stumped because the 19,700 call, which was being written till today, in fact, there's big unwinding being seen out there. And on the flip side, we're seeing some put writing at around the 19,800 odd mark.
I think we have an analyst now joining in to talk about these Bajaj Finance numbers. Rahul Malani, who's Deputy Vice President, Fundamental Research at Sharekhan BNP Paribas. Rahul, thanks for joining in. So what we have right now is that net interest income number, which seems to be a big beat. Your first thoughts, and obviously asset quality has shown some sequential improvement as well.
So overall, on the earnings front, the numbers are in line with the estimates, and in terms of net interest income, as you alluded, it has been higher than the consensus, but it has been in line with our estimates. Overall, asset quality continues to improve. So basically, all in all, it was a strong quarter because already business update was out there. It reported a strong customer addition, as well as the impact was seen on the AUM, which grew by 9% on quarter-on-quarter basis. So
Rahul, what's the
expectation was included?
No, absolutely. I just want to know, what is the margin expectation that you're working with? We still don't have that the exact NIM. I think those calculations are happening as we speak. But what was your expectation?
So basically, we were working with 10 to 15 basis point margin compression, and that is in line with what the Bajaj has reported.
Ashutosh Mishra is also joining us. He's head of research institutional equity at Ashika Stockbroking. Ashutosh, good to have you with us here. First cut, what are your thoughts, Bajaj Finance?
The number is definitely beat estimate. So we were looking, quite clearly, given the business update which they have given and the momentum which sector is witnessing currently, they continue to beat the estimate. What we would like to see is in the management commentaries that how the cost of fund is panning out for them, and the new businesses which they have entered it, what is there, has there changed any view on that, and how we'll take it forward from here on. The cost of fund will be important things to watch. Yeah.
Okay, gentlemen, just to understand your current price targets, given that the stock has had a pretty strong rally as well. So just want to get your sense on the way valuations are placed and your price targets as well, Ashutosh.
Yeah. So if you look at our current target price was approximately 7,000 rupees was there, which has already achieved. We will be revising it, but we are quite positive directionally on the stock. So most probably, post the result update, we will be revising our price target.
And Rahul, your price target as of now?
So basically, current price target on Bajaj Finance is 7,500, and we'll be revising shortly.
Okay, all right. Gentlemen, we'll come back with more, not just the first cut, but perhaps a little bit more in terms of details. Both of you, thank you for joining in with the first looky look on Bajaj Finance. Well, we've got Mitesh now joining in. The market's strong, and that bounce off what we saw yesterday from an important level has put bulls on the front foot. And so far, the front foot is still up front, and there's no backing off. Gains are sustaining. Mitesh is with us. Mitesh, what do you make of it, and what would you trade?
Afternoon, Prashant. You put it very nicely that we are on the front foot and it remains there. I think the good thing is that, we've kind of not gone into a corrective mode. And yet, the fact is that I don't think there are enough signals for me to be convinced that we'll continue and make a higher high. So it might be a few days of consolidation within that earlier high of 960, 980 zones. And on the downside, I think we've clearly now defined 19650, 660 as the support area. So I think it's a few days of consolidation. It will be sideways activity. But I think, today's movement remains to the effect that we have kind of reversed from the lower end of the range and are now heading towards the upper end of the range. So I think around 19,900 plus levels, some trading profit should be taken. There could be a few days of consolidation, so I expect supply pressure to come in again over there. But broadly, it remains the market which will be buy on declines. Closer to 19,700 is where people should buy. And once we get a breakout above this 20,000 level, then I think fresh momentum will come into the market.
Okay.
All right. Okay. Thanks a lot for that, Mitesh. But let's get your picks as well.
So I have a buy on PVR Inox. I think, that's a stock which gave a very good movement a few days back. And then there was 2-3 days of consolidation. It's a buy with a stop at 1490 for targets of 1585 to begin with. And then we'll even look at higher levels over there. And Balkrishna Industries is breaking out. That's a buy with the stop at 2475 for targets of 25.
Okay, all right. Well, Mitesh, thanks very much for that. We'll keep coming back to you during the course of the next 60 minutes for more. Now, let's focus on a CNBC-TV18 exclusive. Sources tell CNBC-TV18 that Mahindra Group is eyeing a sizable stake in RBL Bank. Nisha is here with the details. Nisha, over to you. What are you picking up?
Thanks for that, Prashant. Yes, at least two independent sources with direct knowledge of the development have really confirmed to CNBC-TV18 that Mahindra Group entity may have picked up around 4% stake in RBL Bank through open market trades in this particular month. Now, this is not just a financial investment, is what we gather from sources with direct knowledge. They share that Mahindra Group has ambition and aspiration of being a strategic investor in RBL Bank, which is, remember, troubled and has a sketchy last few years in terms of performance, stock price, as well as the top brass and leadership. So Mahindra Group is trying to also take advantage of this particular situation where RBI would want a long-term solution for this particular company and wants to raise and have a strategic stake of about 15 to 25%. But to the argument of RBI not giving a banking license to any corporate house or industrial house, on the other hand, up to 10% stake as per the present guidelines can be bought by a corporate entity with no promoter tag. So for Mahindra Group to really have a larger strategic play in RBL Bank as it aspires, according to our sources, it will require RBI's approval as well as some dispensation on the present rules. We did reach out to both the companies, Mahindra Group as well as RBL Bank, on these developments. The query, Mahindra Group has no comment. RBL has said they declined to comment. But we do gather from sources with direct knowledge that Mahindra Group is quite excited about the strategic synergistic benefits that this strategic investment can really bring to the table.
All right, Nisha, thank you very much. That's a very interesting story. Ashwin Parekh is now joining us. He's managing partner of Ashwin Parekh Advisory Services, someone who's seen these developments, the regulatory landscape very closely. Mr. Parekh, good afternoon. Good to have you with us here. Prashant this side. So the Mahindra Group, as Nisha tells us, is keen on raising stake to about between 15 and 25%. Now, up to 5%, there is no problem, right? Anything above 5%, you need the RBI approval. What do you make of this development? And do you think, given what we've seen in the past, this will have, this intent of the Mahindra Group will have the blessings of the RBI? In your assessment, sir?
Well, I mean, it's too early to say whether they already have the blessings or they will be seeking blessings, to get to that kind of equity. But one thing is, of course, certain that corporate entities, particularly, the business house or the industrial house, as RBI sort of came out with different definitions over a period of time, will certainly require, because they've not been granted licenses, banking license so far. So one has to really see, in what context RBI will really examine this. If the investment was financial, however, as you say, the news suggests that they are of strategic nature. If it was financial nature, then of course it would have been a very different thing. But if it is of a strategic nature, then of course the regulator will certainly examine, what exactly is the group planning to do with that acquisition, with that equity. So I suppose we'll have to wait for the detail. We'll also have to see whether, there will be a regulatory approval later on. There will be need for one, certainty. That is beyond anyone's doubt. But at least my doubt. But I would certainly say that one has to really see what plans M&M Group has, with this acquisition.
Mr. Parekh, need is certainly there. Whether it will come or not is a different matter. But we've seen, right? Mutual funds, for example, when they cross the 5% seeking approval to go beyond that, there are entities where funds own up to 10%. There is an example of a Catholic Syrian bank, for example, where Fairfax owns 40% or so. But where do industrial houses really come? Just looking at how the RBI has looked at this. Conglomerates trying to get into banking. Go on, sir.
No, sure. So, you're right, absolutely, Prashant. See, I'll tell you, the regulator has been so far, not allowing any industrial house, any business house, to really acquire equity in the banking company beyond a certain threshold. And that too, sort of, with the approval. So to that extent, one has to really see whether sort of, they consider acquisition, accepting that an industrial or a business house can really acquire. Fairfax, as we speak, there was a different example altogether because, right from the very beginning, before even they acquired anything, so they did seek RBI permission, and it was granted. RBI considered, after taking into consideration several factors, including the fact that it was a troubled bank and it needed sort of certain order of capital and governance. So those things sort of certainly the RBI will look at. RBL stands out to be a different case altogether. So let's wait and watch, I would say, in terms of what does the regulator.
But basically, Mr. Parekh, what you're saying is it's case by case. It's not. There's no. It's on a case by case basis, right? That's what you're saying. So it's possible.
That's it. See, this is true not only for sort of, the regulators in India. This is true for all financial sector regulators worldwide. The fit and proper test is a case-to-case kind of a thing. It is never like a regulation or, given that everybody, let's say, in a certain category or in a certain segment will therefore they be allowed on. Even within financial conglomerates also, if you've done 10 years of financial services and then you want to apply for a bank, for instance, on a case-to-case basis, the RBI examines. It's never, a general kind of a regulation that applies. So certainly it will be examined by the RBI, as an individual sort of, a transaction and then they will really decide on it.
Got that, Mr. Parekh. Absolutely, that point is well taken. I think over the last several years we've seen every time there's been regulation around even new banking licenses, the RBI has taken a fairly vigilant stance with respect to business conglomerates getting into banking, meeting the fit and proper criteria, and also shareholding norms, been diluting shareholding over a period of time. So we'll have to wait and see how this plays out. But thank you very much. Appreciate your perspective on this. In the meantime, we've got a blowout profit number from BPCL. It was always supposed to be a smart quarter, thanks to all the over-recoveries that companies like BPCL are making on the marketing side of their business, on the fuel retailing side. But that number has really blown past expectations, well over a beat of 1,500 crores, nothing less than that. The top line was supposed to decline, and there was a minor decline that was expected on a year-on-year basis. I guess the refining business is where things were a little tight this quarter, but it's the over-recoveries on the marketing side which was supposed to be the kicker. Okay, we've got the GRM figure. I think it flashed past $12 or so on the GRM. We'll get Sonal in on the details in just a bit. But the stock for the time being is reacting quite positively to those numbers. So not bad. I mean, the results that we've had, even the reactions, you've got Bajaj Finance, L&T, it's been largely a good day for the big stocks.
Actually, the reaction on Bajaj Finance was good.
It's turned around now.
Yeah, the stock is moved to the low point of the day. I will have to check whether or not there was something in the numbers or it's just routine profit taking, because from being higher, suddenly we have that stock that's gone smashed down. So we'll wait by. Maybe it could be some routine profit taking, but in case there's a bit of a niggle in those numbers, then we'll get to that in just a bit. For the time being, let's address BPCL. Sonal is with us to run us through a quick analysis on that. Sonal.
Well, it is a top-down beat, Nigel, and that is why the stock is excited in trade. And surprisingly, it is a refining-led beat, because their expectation was that it will be a marketing-led growth this time that we'll see in BPCL. Of course, we'll need more details as far as the marketing volumes and the marketing margins, most importantly, are concerned. But the margins overall have come in at 14% versus an estimate of 12.9%. Reported GRMs are at $12.50 per barrel, which compares with a poll of $11 per barrel. And net profit, too, is higher by almost 1,500 crore rupees if we compare it with the poll as well. We, of course, do not get the commentary immediately from the company, but we need to understand now that marketing margins are still at elevated levels. They were around 11 to 12 rupees per litre, even in Q1 of FY24. But now we have seen crude prices coming to elevated levels of $82 per barrel, which is slightly negative for both the marketing and the refining segment. Though so far, cracks or the GRMs overall have been steady, but marketing margins, they must have come down. So management commentary on that will be important. But as far as Q1 numbers are concerned, a definite beat, and it is led by the refining segment, where margins, the GRMs that is, have come in at $12.50 per barrel versus $11 per barrel.
Okay, all right, Sonal, thanks for giving us your quick insight on those numbers. Abhijit Bora, Senior Research Analyst at Sharekhan, joins us on the phone line. Hi, Abhijit. Good afternoon. Thanks so much for joining in. Well, we have the BPCL numbers that have just flashed in. It appears it's a top-down beat. Your first take on it?
Yeah, surely. If you see, there is a beat of 17% versus our estimate on the EBITDA. It came at around close to 15,800 crore. Even the PAT is 20% higher than our expectation. It came out around 10,551 crore. So this is primarily led by beat in the GRMs. We are expecting $11 of GRM. It came at $12.6. And when you compare it with Singapore GRM, it was close to around $4 this quarter. So that reflects significant benefit of a discounted Russian crude also flowing into the Q1 GRM as well. Volumes are also good with throughput, refining throughput 10.4, beating our estimate by 4%. Marketing sales also strong at 13 million tons, 5% above our estimate. And obviously 10-11 rupees per litre of petrol diesel margins would have also added this growth.
Okay. Abhijit, you're talking about refining segment leading to the beat that we are seeing this time around. But what is the outlook when it comes to Q2 GRMs? Have the refining margins improved? And on the marketing front as well, they have been seeing higher margins because crude prices were lower. But now crude prices are at $82 a barrel. What do you make of that now?
Definitely, this Q1 numbers will not be sustaining in the coming quarters given the recent surge in the oil prices. So if you see, this is normalized to around 5-6 rupees per litre of marketing margin, but still that is higher than a marketing margin of 2.5 to 3 rupees per litre. On the other hand, GRMs have improved from $4 per barrel to currently around $8 per barrel, and the benefit of Russian crude will also flow in to the OMC. So, although the marketing earning momentum will a bit slow down, but still it will remain above the historic level until crude passes $85 level.
Okay, all right. Got that, Abhijit. Thank you very much for that quick take, and thanks to Sonal as well for telling us about the details on BPCL. The market has cooled off a little bit, you'd have to say. We are just below the 19,800 handle now on the Nifty, so let's not lose sight of that as well.
You know, Bajaj Finance, as Nigel was pointing out,
it's down 1.5% now.
Is it basically from the high? It's lost about 230 odd rupees.
Yeah, Abhishek has sent a quick detail out there. The NIMs have declined on a year-on-year as well as on a sequential basis. It's down to around calculated NIMs, 9.95%. That compares with around 10.35% on a year-on-year basis. And on a sequential basis, it compares with around 10.11%. But I think the sheet was bracing for some kind of compression.
Yeah, it was 15-20 basis points that was expected.
And that's precisely what's
happened.
Yeah.
So, not quite sure. I mean, maybe there's just something else that's triggered the profit taking. Let's ask Prakash Diwan, who's been waiting by as we've been going through, one news update after the next. Prakash, good afternoon. That kind of a day, busy. Let's start off with Bajaj Finance. So, what do you make of this sudden profit taking that's come in?
So, of course, most of it will get unraveled once we hear the management in terms of, and their calls have always been very insightful to figure out how to approach this. But, these numbers very clearly tell you that there could be a peaking out in terms of the kind of growth that they've again notched. This was not a quarter which was likely to be very promising, but they've again done that kind of growth. And my worry is, the kind of expectation that these numbers set up is always very tough to match. Going forward, growth rates are not going to be very superlative as you had in the last 5-7 years. So that is something where the expectation, the tempering of expectation is likely to have some sort of volatility on the stock price. I have no idea why this is suddenly lost as $200 bucks. After the numbers look so robust and the market accepted or welcomed that. So there must be some internals which are possibly not going down well with the street, but we'll have to wait for more details in terms of how things go forward from here, rather than the quarter gone by.
Okay, all right. Noted that, Prakash. Just stay with us. So let's focus on another story. Manappuram Finance, that's in focus. Sources tell Money Control that its subsidiary, Ashirwad Microfinance, has kick-started preparations for an IPO. Ashwin Mohan joins us to tell us more about that exclusive. Ashwin, could you tell us who are the iBankers and what's the estimated size of the issue?
Good afternoon, Nigel. Good to be on the show. The street clearly seems to have welcomed the value unlocking plans of the subsidiary of Manappuram Finance, which of course is Ashirwad Microfinance. We are given to understand from our sources that Ashirwad Microfinance has kickstarted early preparations for its IPO, via which it's looking to garner or mop up around 1,500 crore rupees, and that's for growth capital. There are 3 investment banks that have been picked for this deal that is in the works: JM Financial, Kotak Mahindra Capital, and Nomura. In terms of deal timelines, we're given to understand that this deal, in terms of the DRHP at least, the plan is to file it by September. And of course, if the markets sort of hold up, maybe we could even see a launch before the elections next year. That's as far as some of the IPO details are concerned. But keep in mind that this is a subsidiary that was in fact acquired by Manappuram Finance back in 2015. Ashirwad Microfinance has an AUM of around 10,000 crore rupees, profit of about 218 crore rupees. It surged quite a lot on a YY basis. And this comes in at a time when the entire microfinance environment, it's achhe din back for the microfinance environment. From a regulatory point of view, RBI has ushered in new norms. From an analyst point of view, and of course, even if you look at the stocks of some of their peers, like for example, Warburg Pincus backed Fusion Microfinance, that stock has surged by more than 30% in the last 3 months. So there's a lot of optimism in the sector, and that's perhaps the reason why Manappuram Finance is choosing this time to go ahead and kickstart the preliminary IPO preparations. Keep an eye out on this one. There's a lot of deal activity in the buzzing BFSI space. Back to you guys.
All right, Ashwin, thanks so much for joining in and giving us that quick update. Well, Prakash, what do you make of this development? The street clearly is excited. The stock is at the high point of the day.
So, I think there's always some sort of a succor that the market derives from any kind of a improvement in the business model, and that vulnerability on gold financing, the kind of news flow that has been around this has made the stock a bit pale in terms of performance. So this definitely adds a lot of spunk to the whole thing, and you have microfinance as an area which could probably be much more resilient in terms of the kind of risk that fundraising issues have had with the gold financing company. So my sense is the market probably seeing this as respite, Nigel. Of course, we'll have to wait to see the final details of the IPO and in terms of how the benefit translates in hardcore numbers to Manappuram Finance. But this definitely is a respite from the beleaguered state that probably Manappuram has been also facing, given the headwinds of competitive intensity in the sector largely.
Prakash, thank you very much for joining us. Good speaking with you here. Quick conversation, but thanks for your time as always. Well, the market, by the way, from the point that we started the program at 2:30 to, we've lost 55 points. It's a sharp cut southwards. And the biggest drag, which was not there when we started, was Bajaj Finance. Bajaj Finance is, adding about 10-11 index point lower on the Nifty. It's now followed by HDFC Bank, which is dragging the index by about 5 or 6 points. And then there is Mahindra, which is down about, adding about 5 odd points lower. ICICI Bank and throw in Bajaj Finserv. So those are the ones which are responsible for bulk of these losses over the last 20 minutes or so.
Prashant, I also wanted to mention, we've been so caught up with our own earnings here domestically. I just had a check on global screens. So for whatever it is, maybe it's just some jitters, wondering what the Fed's going to do tonight. Let's not lose sight of that. Because European markets are actually trending lower. The French market, for instance, is down 1.5%. Some of the Asian markets obviously cooled off, and Hong Kong is fine because Hong Kong had rallied big time yesterday. So Asia cooling off was okay, but those are some of the European markets for you, and even futures on Wall Street very cautious right now as we're getting into that big event. We will take a break on that note. We'll talk about the Fed and a lot more. Our next guest, Amit Gupta from ICICI Securities PMS, will also join in. Welcome back. More earnings before we get to our next market conversation. Praj's numbers, by the way, on your screens. There's also Deepak Fertilizers, and there the numbers were weak right from the top. And margins have come down, profits have halved, I think. It's a pretty dramatic show on the lower side for Deepak Fertilizers. Let's go across to Sonal. Yeah, look at that stock. Completely fell off a cliff the moment the numbers hit us. Sonal, do give us the details of what's happened here.
Well, these numbers are lower than what IIFL was estimating as well. So it is a top-down miss. It's not only a YOY decline that we've seen. Even quarter-on-quarter, there is a big decline in the revenues and margins as well. Revenues at 2,300 crore rupees compare with an IIFL poll of 2,600 crore rupees. Margins have come in lower at 12.1%. IIFL was estimating a number of 15.8%. And accordingly, profits at 110 crores are half of what IIFL was estimating at 214 crore rupees. Now, of course, in terms of utilization and pricing, that has been lower in Q1, both their major products, that is nitric acid and TAN as well. A couple of things that happened this quarter for the company is the lower pricing. There was some China dumping as well in the IPA segment. Also, volumes were expected to decline on a high base in the TAN segment. Additionally, they were going to see some benefits coming in from ammonia plant, which was expected to be commissioned in Q1, but that has been delayed further to second quarter. So those benefits did not come through this time around. And also fertilizer margins, they were expected to be lower because of NBS rates being reduced. But this time around, the company has gone ahead and they have reported a loss in their fertilizer segment. So if we look at the segmental performance, their chemicals EBITDA has halved to 337 crore rupees, and the fertilizer segment has reported a loss of 69 crore rupees versus a profit of 114 crore rupees. So definitely weaker than what the street was working with. And the global factors that we've been talking about continue to impact commodity chemicals, and they have commodity chemicals in their portfolio. That's why this big decline that we are seeing right now.
Okay, all right. Sonal, thanks a lot for joining in and giving us that quick analysis. Well, let's welcome Amit Gupta, Senior VP and Fund Manager at ICICI Securities, who joins us on the show. Hi, Amit. Good afternoon. How are you feeling, Amit, about the markets? And I believe, a couple of these themes you continue to like. So tell us about the building materials space out there. We had Kajaria Ceramics that came out with a set of numbers. You continue to remain bullish on that one?
So I think markets are in good shape, first of all. So there can be, some consolidation possible for now couple of months, because if you see, it was first of all driven from the global markets also. We saw S&P actually giving higher returns than Nifty actually in the last few months. So S&P has moved up in anticipation of good results. But if you look at the Goldman Sachs results over there, actually it has disappointed. I think that is where some consolidation is possible there, and it is also possible in the Indian markets. But the lower dollar, I think, is definitely coming to the rescue for the emerging markets, and we are seeing more FI flows actually coming in, and that is where downside seems to be limited, and it can be more stock-specific kind of scenario. Now, coming to Kajaria and housing materials, I think definitely they are looking good, because the initial move came in the real estate players, and now it is being followed by the building material players. So, for example, if you look at Kajaria, so it has increased its market share from 31 to 36%. And we have seen that the lower gas prices have added to the margins. And I think going forward, whatever tiles volume growth you are expecting, so industry is growing by 8%, but they are talking about in double digit. And going forward, I think 13-15% of growth the company is talking about. So I think the canvas is good. It has gone through a long consolidation around, I think, 1100, 1200 levels, and now the stock is coming out. So that is how the market is. I think that a stock-specific scenario is likely to prevail, and such kind of companies actually can outperform the index.
The other one is Supreme Industries, right, Amit? Good afternoon. I think it's the first down day, and that too just a 1% cut after almost 13-14 days straight of an up move. And when I point out the performance of Supreme, someone said, well, look at what Astral has done. So Supreme is an underperformer. But good for you, you own the name. What's happened here? Is something changing at the margin, or again, like Kajaria, are they getting share? Any latest data points on this one?
So they have already moved up. I think if you look at Supreme Industries, it was around 2,600, 1,000 points of move we have seen already in the stock. And that is where actually whenever market goes into some consolidation, I think you will see that consolidation coming in the stocks also. So margins, yes. So they have margins. Actually, it is definitely a volatile, variable, because it has gone up, gone down. But I think the overall volume growth is the key. If that remains, I think margins will pick up again, because if crude comes down and PVC prices remains lower, I think obviously Supreme Industries is going to benefit. If you look at previously, we had seen Astral Poly was benefiting because of CPVC. But when the actual crude prices declined and PVC was down, I think Supreme Industry, which were at a much lower valuation than Astral, I think this was a company which is seeing cash flows. And I think this money flow will continue in the stock. Possibly some kind of decline is possible. And I think then we need to see the possibly the next level of upside.
Okay, we are getting some commentary from Bajaj Finance expecting gradual moderation in the net interest income. Cost of funds has gone up 22 basis points Q on Q. So I guess it's the worry about what happens to margins from here on, incremental higher cost of funds, perhaps lower NII. And maybe that's one reason why the market has chose to sell off on Bajaj Finance after a pretty strong show in this quarter. Amit, hi, good afternoon. What have you sort of made of the financial numbers so far? We've had a lot of the bigger banks report, ICICI, HDFC, Kotak, IndusInd. What's your read-through? Even in the non-bank side, we've got Bajaj Finance today. And if you were to allocate incremental money, where would you put it?
So I think one is PSU banks, the other is the vehicle financing companies. And the reason being, if you look at the PSU banks, first of all, this quarter, I think in comparison to private banks, you are going to see almost a very significant jump in the PAT. So that is what is happening. You have seen the Union Bank results and some other PSU bank results have come out, and they have definitely given a very positive move. I think 95% of PAT year-on-year growth is expected in the PSU segment, PSU bank segment, and the private banks it is 35% of growth. So that is where the mid-cap private banking, possibly that is one segment which possibly can come out, and the PSU banks. So PSU banks, I think when the NPAs are at 10-year lows, credit cost also is at 10-year lows, and the corporate lending book is just growing by 6%. I think there is a lot of room. So once it is growing, I think you will see these corporate linked banks performing much better going ahead. And this is where I think more alpha is there. I think vehicle financing, Mahindra and Mahindra Finance is one, I think, which is on the cusp of some kind of re-rating happening. This has been one of the laggard stocks. And I think the way the focus is there for the management now, they are talking about more SME and then more affluent investors focus. So I think overall ROA and asset quality both are likely to improve, and this is the next kick actually for M&M Finance. I think our focus is there on the stock, and we believe this is the market now. When the market is already little elevated, you need to find out some stories which can create alpha. So the old stories where the valuations are already very steep, unfortunately some kind of disappointment coming in numbers, you are not able to get that kind of returns or alpha. And these are the stocks like auto financing, which is coming out now. And when the interest rates are topping out, I think this is one segment which comes better, because when interest rates are moving up and they give a fixed rate of automobile loan, I think they were the laggard before, so they should come out now.
You got that. Any thoughts on, I think in the industrial space, you have a few ideas as well, right? Our team was just pointing out, my colleague Hormuz was pointing out that something like a BHEL, actually a lot of these stocks of, yesteryears are coming back and sort of crossing levels they've not done for a long time. BHEL 100 in this case. But I think you own names like SKF, etc. Talk to us about that space, Amit, that you like.
Yeah, so I think the PSUs definitely are coming out. And why it is happening? Because I think when the government balance sheet is better, generally you see good moves in the PSUs. And right now we are seeing whether it is capital goods or power or PSU banks, I think the PSUs from these spaces actually are coming out. And when I look at industrials and look at some of the private players, in fact, one of the largest manufacturer of bearings in the world, SKF, its balance sheet actually is turning around. If you see now, when the more wagons, railway wagons, where we have seen more than 50% of capex. If the companies like BHEL, if they are the beneficiary, simultaneously, if you look at SKF, the bearing companies are definitely beneficiary of this. And that is where we are seeing SKF, which is 50% exposure to automobile, 50% exposure to infra. I think from the wagon also it is going to be benefited, and from the automobile cycle bottoming out, it is going to be benefited. So my sense is that the coming quarter numbers also are going to be favorable. And that is where the stock, which had already corrected from close to 5,000 plus levels to 4,000, and it has reverted. I think this sustenance of the stock prices are likely to continue, and you will see good returns actually possibly going ahead.
Okay. All right, Amit, appreciate you stopping by and discussing all those ideas with us. Wishing you a good evening ahead, and thanks so much for joining in. But let's focus on the stock of the last 30 minutes or so. That's Bajaj Finance. Abhishek joins us to analyze those numbers. Sharp drop is what we're seeing in the stock. Abhishek?
Well, Nigel, to begin with, the strong business momentum that Bajaj Finance has seen has not translated into meaningful NII growth, and NII growth is below our poll. So calculation also shows that, the net interest margin might have declined YOY and quarter-on-quarter. Talking about business growth, AUM growth is pretty strong at 32.4% YOY and about 9.2% sequentially. Customer acquisition has been strong because customer base has grown by 21% YOY and about 5.5% sequentially. The new loans book, that's up 31.5% quarter-on-quarter. So business momentum is good. Calculation shows that your average ticket size might have increased by 9.5% YOY and about 3.5% sequentially. Even the cross-sell rate have actually improved to about 8.36% when compared to 6.47%, and it was on a declining trend. So 6.47% is on a sequential basis. Calculation also shows that the net interest margin might have declined by 39 basis points on a YOY basis and about 16 basis points on a sequential basis, as cost of funds have weighed in terms of the net interest margin. So NII has come in at 6,718 crore. We were working with a poll of 6,997 crore. Other income growth has been strong at 23% YOY and about 10.5% sequentially. Operating profit growth is also strong. However, despite improvement in asset quality or gross NP ratio, provisions have increased sharply by about 15.8% quarter-on-quarter, which means there might have been some write-offs undertaken in the asset quality improvement. PAT has come in at 3,437 crore. We are working with a number of 3,368 crore. So the net interest margin or the NII miss is a disheartening factor in the results. Back to you.
Abhishek, there are some statements also coming. Gross NP, they see gross NPA in the range of 1.2 to 1.4% in the long term. I don't know if you've seen those statements. Anything you want to add to that?
No, I've not seen those.
This is the guidance. They see gross NPA in the range of between 1.2 to 1.4% in the long term. And I saw one more statement saying they see some moderation in NII.
Yes, I also saw the statement that they are expecting, in FY24, cost of funds will be on the higher side. So there will be some pressure in the net interest margin as well. And talking about 1.2 to 1.4% in terms of long-term average, currently in Q1, it's about 0.87% in terms of gross NP ratio. Back to you.
No, absolutely. And that's the point. You hit the nail on the head, Abhishek, because if they reported 0.8% in Q1, and they're saying gross NPAs are going to go up to 1.4%. There's anyway a rise in provisions in the first quarter. Then I guess the street will get a little vigilant on asset quality as well when it comes to Bajaj Finance. So we need to watch out for that. Stocks down 3%, pretty much the lows of the session. Let's take a quick break on that note. As always, we'll get you a check on what dealing rooms are talking about today. Lots of earnings coming in. And of course, then some final trading calls as well. More numbers. It has been a hectic edition of Closing Bell, really. Revenue coming in for Cipla, which is slightly above estimates, just about 200 crores, I think, above estimates. The EBITDA line also looks good. It is above the pole, at least for now. The stock's reacting immediately to those numbers. And there comes the margin profile, and that's also beaten estimates quite handsomely, 100 basis points above the pole. So this looks like a top-down beat from Cipla. We'll get Ekta in just a bit and also get some analysts in. But for the time being, the stock is reacting quite smartly to the update coming through. We have Ekta with us. Ekta, this is looking good, right from the word go, right? Top line down?
Yes, absolutely. Well, good performance which is coming for Cipla, especially for the margins. It's coming at around 23%. The street was anticipating 21 to 22 odd percent, and the street was worried that they won't be able to break beyond that 22% level. So definitely a good performance which is coming for Cipla in terms of the margins. The consolidated revenue double-digit growth over 15%, so around 17 to 18% on a year-on-year basis is what they've reported in terms of revenue growth as well. So I think it's definitely a top-down beat which has come through for Cipla, and as you can see, the stock is reacting quite positively. Now you need to put the numbers into context as well, because remember, the street has been worried about a lot of overhangs with regards to Cipla, such as Advair generic, which is one of their key inhalers, being delayed because they have faced regulatory issues at their Indore facility. So in that background, a strong set of numbers despite the delay in Advair generic, despite the overhang of the Indore facility, is definitely a positive. Now, one of the things which has probably aided them is also the contribution of cancer drug Revlimid generic. Remember that many companies have been selling the generic version of that particular drug in the US markets based on certain limited volumes, which they can till 2026. Cipla has probably benefited from that, as well as the other drugs that it has in its portfolio, including, and this comes at a time where they have been losing market share in their inhaler albuterol. So overall, definitely a good performance. India has always been a strong market for Cipla, and maybe the respiratory franchise has really worked for them this quarter. So that is something that the street would watch out for. We'll wait for the geographical segment, but nonetheless, margins have come in at probably a multi-quarter high at around 23 odd percent, with revenue growth at over 17% on a year-on-year basis. Strong performance, which is filtered down to the profit for Cipla.
Okay, all right, Ekta, thanks a lot for that. Well, we have Cinderella Carvalho who joins us as well on the show. Hi, Cinderella. Good afternoon. We're getting news that Cipla, the numbers are looking good, and it's a top-down beat. The margins have come in at around 23.5%, which is a multi-quarter high, I believe. Your first take on it?
Yeah, I agree with you. It's definitely a margin beat on our numbers as well. We were at 22.6% for the quarter. But of course, I think, we have to see if there is any other element in terms of that we need to consider. However, my belief is this could be driven by a better domestic and ROW rather than a US number. But we are yet to see the US numbers.
Okay. So, Cinderella, in terms of key drugs in the US, what do you think worked for Cipla?
So, see, in terms of our understanding, we were expecting some tepidness in the albuterol segment specifically, given the trends that we were seeing in the Symphony data, Bloomberg Symphony data. However, in my mind, I think the Laritide and the other drugs are doing very well for them. And that is why we are seeing these numbers. So the idea is that definitely Revlimid is helping everybody. We are expecting better numbers even for Reddy's this time. So Revlimid is one of the factors, but apart from that, I think the base business has some support from the new launches, which are also ramping up faster.
I just wanted to come in on the margins, because I think the street would like the fact that the margins have come in at over 23% for Cipla this time. Do you think that this kind of margin performance is sustainable for them in the context of US price pressure, Advair generic probably seeing delays, and the Indore regulatory issues?
No, I don't see that these margins may sustain. I believe that the margins could taper down a bit, at least given that, there will be some higher expenses on the remediation side as well from Indore, as well as we will see some bit of impact of Indore into US numbers. and overall higher R&D spend that we are expecting. So we believe that margins may taper down a bit instead of, going ahead.
Okay, well, Sunila, thanks very much. We'll pick up on this later, but thank you for the first cut reaction coming through on Cipla. Stock spiked and it's maybe stalling a little bit, but just very early reaction. 1,073 on the stock. Our segment D Street Chatter is up next. Nimesh has been working the phones to get us an insight of what's happening in dealing rooms. Nimesh, I mean, it's buzzing, right? And results are coming in, firing in from all directions. The last one was not so great in terms of a reaction, Bajaj Finance, but Bajaj Finance has gone down and market has picked up, if anything. Go on.
Yes, Prashant. So, again, the momentum is clearly with the bulls, and that's backed by institutional buying as well. In fact, I understand there's going to be a small market at close basket buying, especially nifty names at a leading FIDs. So the momentum is clearly with the bulls. The sector that clearly stands out is financials, and within financials, the NBFC space is well bid, is what I understand as far as the flows are concerned. But if you look at from a momentum point of view, there is clearly momentum in the PSU stocks across the PSU stocks, whether it's OMCs, whether it's defense names, all are buzzing in trade for the last many days, and that's been the trend today as well. So clearly the momentum is with the bulls, backed by institutional buying, and I believe within financials, it's the NBFCs which are well bid today.
All right, Nimesh, but tell us, what about individual stocks? What are you picking up?
So the first stock on my list today is Nigel, is Indus Tower. That stock is buzzing in trade on huge volumes at HNI desk. I believe some large HNIs are quite active in the stock as well, and the street is anticipating some sort of a corporate development. Remember, for a long time there is this expectation of Vodafone India raising money, and that's going to be a big trigger. Even yesterday, the Kotak upgrade was essentially on the back of expectation of some fundraising, which could help Indus Tower. So that stock is buzzing in trade today. The second stock is Coforge, flat in trade today, but there is a very strong indication of a large block coming in Coforge very soon. Remember, for the last many quarters now, the promoter has been a big seller in Coforge, so that's something to track. The third stock is Indocount. A bit surprising that this stock is well bid by larger institutions. So very strong flows at a leading FIDs, and I believe some long-only funds seems to be quite active there, and hence a big move in that stock. So expect high delivery volumes in Indocount today. And the last stock is M&M. Again, the group is in the news on the back of what we reported earlier about they buying 4% in RBL Bank. But M&M is under pressure today, largely on the back of sell flows at a leading FIDs. So some bit of selling pressure or profit booking in M&M. But again, from a flow point of view, what stood out for me was Indocount, some strong buying at NFIDs today.
Okay, all right, got that. Thanks, Nimesh, for all the action, all the updates over there. By the way, Axis Bank has really taken off. That's the next big number that we're watching out for. And the stock is at the day's high, about 2% up. So it's approaching the earnings in style with strong expectations. Let's quickly head across to Mitesh and get some final trading ideas going. Mitesh, so final moments of trade, what's your advice?
I would possibly suggest that trade with stock-specific bias, because you maintain that the indices are not showing you enough traction. India Bull's housing finance, I think, is something which is looking good to me. So that's a BTSC with a stop at 124, maybe just 10-20 paisa below it, and a target of around 129, 130 for tomorrow is likely. While on the selling side is IGL, which I would recommend selling or taking STP trade with a stop at 474 for targets of 460.
Okay, all right, Mitesh, thanks a lot for that. For the time being, though, we'll slip into a short break. You come back, we'll be joined by Mayuresh Joshi on the other side. Welcome back. Well, let's get in Mayuresh Joshi. Mayuresh, we're a little short on time, but we had have a couple of stocks that are doing very, very well. Piramal Enterprises is up close to around 8%. Any view on that one?
Afternoon, Nigel. I think the entire thesis that is getting built around Piramal is that the wholesale book will start coming down quite significantly, and retailization will probably take a large chunk in terms of both volumes as well as value when it comes to the balance sheet. And the second element to this will obviously be that asset quality pressures and the recognition that they've been largely doing on their balance sheet for the wholesale book, and even the troubled part of the retail book through the acquisitions that they have done. A large chunk of that is largely behind us, and therefore I think as new quarters start coming through, it will largely emanate into better sourcing and better asset quality numbers as we move along. So I think that's the entire premise and thesis on why the momentum in PEL is largely.
Okay, I think we just saw the Cipla US sales number flash past. I think it was 222 million, if I saw it correctly, which would be along expected lines because the range was somewhere around 218 thereabouts. So the US business has done well. Margins, EBITDA, on all fronts, profits. Cipla has beaten estimates on the numbers that have been reported today. Mayuresh, hi, good afternoon. So many numbers coming in. Let's get your view on Bajaj Finance and the kind of statements that the company has made, right? They're saying maybe there could be some deterioration in asset quality, cost of funds could go up, and the stock understandably sold off. What would you do here, and what's your advice?
Afternoon, Surabhi. No, I think two things. One, I think in terms of the results itself, results largely in line with what the analyst community was expecting. 32% AUM growth. The NI growth has been quite robust as well. They've added almost 3.84 million customers in the first quarter. And therefore, I think when you're probably looking at the core dynamics are looking quite stable. I think these 2-3 statements that have probably come through, GNPA is between 1.2 to 1.4. I think the management probably needs to clarify because on a standalone basis, Surabhi, Bajaj Finance has reported GNPAs in this quarter at 1.1. So I think talking about standalone numbers of that 1.2, 1.4% range is something that needs to be looked for. And the second element in terms of moderation of both NIMs and loan growth going ahead, is it because of impending competition or are they getting a little bit more aggressive when it comes to their rates for new borrowers? So that competition probably might not snatch it away from them. So I think the core numbers have been okay. I think these 2-3 qualitative issues which will determine numbers going forward is something that the street is a little bit worried about. So I think I'll wait out for the management call, Surabhi. I think wait for clarification on all these aspects that the management can give us.
Okay. Hey, Mayuresh, thanks for those views, but if I can request you to just sort of stay with us because we're expecting a few more numbers. Tech Mahindra should be out shortly. So we'd like to bounce that off you for your views. But, for now, I think it's up, just closing level. I'd like to point out that Idea is up almost 15%. It's at 9 rupees. And the huge volumes, by the way, on it. But that's not the highlight of the market. 90 points higher. Things are looking solid. 0.4%, 0.5% actually nearly on the index. The bank Nifty will come up on your screen. A good day. And I think we'll have similar to Nifty, and the mid-cap and small-cap indices higher, but maybe not as strong as what we are used to on those indices. Small caps especially, 0.25%. We're used to like almost a 1% daily CAGR run rate on the small-cap index. Well, that's not the case. Bajaj Finance perhaps is the big, the relative incremental mover in the last 1 hour of trade, and most of that came through after results were declared. Lots of action in the broader market, guys.
On the broader market screen, Canfin Homes on the downside in terms of negative news headlines really stands out. Markets not happy with this, repeated instances of frauds. That's one. Of course, Tata Motors DVR was a big trade today, 12% up on that stock. By the way, Jyoti Laboratories has put on another 8% after a 20% up move yesterday. Massive, massive move on this one. Amber finally decided to pick up. So 5.5% up on Amber Enterprises. These are some of the names on the upside. I just want to point out one more stock, important from a news flow point of view, and that's Triveni Engineering. Triveni reported numbers, which is fine, but the management came out and clarified that there is no business demerger that they're considering right now, and that disappointment showed up on the stock. It is finally closing down with a cut of about 7%.
I think those numbers were soft as well, both on the sugar side and the distillery side, out there. But a few more stocks just to highlight. We're talking about Tata Motors DVR, Jade Irrigation DVR. That stock was up close to around 20%. No news flow out there, but that one was buzzing around. A couple of other notable movers. Ircon was up close to around 7% in today's trading session. Lovable Laundry as well was flying away in trade today. And RVNL as well was up close to around 4%. So there were select stocks that continued moving up and moving up in style on rather large volumes. For the time being, we'll slip into a short break. We spoke to a whole host of managements all through the day on their Q1 numbers. All those excerpts expected on the other side. Stay with us.